Welcome to the daily update. This is being prepared Wednesday, September 28th, where we'll look at the action in the market and then see how things look for Thursday, September 29th. And we've got a lot of different events going on right now that specifically with the hurricane hitting Florida. And I did live for Florida in a time. I know there's a few of you that watch the videos that are from Florida. I have family in that area as well. So just a heartfelt thought and prayer headed your way as you make it through these very difficult situations. We also had a big explosion with the Nord Stream pipelines, and we're not really sure where that's at right now. Who's behind it? Was it Russia? Was it the US? Was it the EU? Was it a country inside the EU? Was it a private organization? A lot of speculation at this point. So that'll probably be coming out as well, and that can bleed over into the markets in Europe, which also can have an impact on the US markets. We also have a lot of things happening in Great Britain right now that are influencing the US markets. So let's go back and talk about what happened. Right at the open, it was kind of a flat open. We did go a little bit higher right out of the gate, and we went above the daily pivot, which was at 36.63. As the day went on, buying continued all the way up to R1 at 37.02. So we got back above that 3,700 level, and then buying continued even beyond that. So we saw a pretty nice move up anyway, as far as buying is concerned. Going into the close, the buying still continued into the close with some selling right at the end. That brought things down just a little bit. Otherwise, we would have closed pretty much at the highs. So we have to say now, is this just a bounce from a deeply oversold condition, or is this the start of something? We don't really know the answer to that right now. We can formulate scenarios on both sides and be ready for it, and then just sit back, watch our charts, and then let them tell us what is actually happening. We ended up being up 1.97% by the close. We were up over 2% at one point. Volume was above average. And then we have the technicals, which they're still negative, but they're bouncing from oversold conditions. So we're seeing some improvement with our technical indicators, inflation and interest rates. And also you can throw the whole currency thing into the mix as well with what's going on in Europe. So we have a lot of concerns within the US and in Europe as well. And then the geopolitical concerns that I mentioned. Earnings will be coming out on a company by company basis, and then any Fed speak that we may get. So what are some comments? Was this just a bounce, or was it a bottom? And people are going to have their opinions. And the thing is, it's good to have opinions. It's good to have scenarios. The way I handle it is there's only three things that can happen from here. We can continue to go up. All right. We still don't know if that's just going to be more of a bounce or if we're actually going to start going higher from here. We can stay the same, pretty much unchanged, or we can go down from here. And I try to look at all three of those scenarios at the same time so that we're not caught off guard. If I get real dogmatic about something, sometimes I'm right, sometimes I'm wrong. Now that's throwing things into a gambling situation. We just have to be prepared whatever is happening. And that's my whole approach that I take. The Bank of England, or BOE, they announced that they're going to be purchasing some bonds. Okay, this is like quantitative easing on the left-hand side of the road. And that's going to happen between September 28th and October 14th. And they're trying to do this to restore some kind of sanity, all the crazy things that are happening in England right now. Stocks are still being influenced by currency movements, specifically the British pound. And I still have a chart of that that's updated to show you. And then we had the Nord Stream pipeline explosions. And I talked about that right at the beginning. We don't really know who's behind it. It does look like it was an act of sabotage, so it was purposely done. And what's that going to do? Germany had already had sanctions against Russia, so nobody was really getting anything from the pipeline. We had the president coming out during the election saying that I shouldn't say that. It was right as the whole Russia-Ukraine situation was developing, where he said, well, we'll just take out that pipeline if Russia doesn't act the right way. That's kind of a spooky statement to make. You have a lot of private organizations, you have oligarchs, you have all these different things that could play into it. The things that I'm looking at for information, it's all speculation at this point. Now, we might get some light on this at some point, but this is kind of a bad time for this to happen as things are turning cooler and we're getting more into the winter months, where Europe was already going to have a pretty difficult winter anyway because of the gas and oil and inflation and things that are going on there. Is this going to make things even worse, specifically from a geopolitical standpoint? Because now you don't have the Nord Stream pipeline situation really to negotiate with on either side right now. The 30 to the 5, the 10 to the 2, the 10 to the 5, those yield curves remain inverted. Sentiment is still tipping over. We bounced up a little bit, but we're still pretty extreme negative right now. We had the weekly MBA mortgage applications index come out. That continues to show a decline. It was down 3.7%. Then we had the advance report, and there's a lot of words here on the slide, but this isn't really a major report. It's the advance report for international trade in goods. It showed a deficit of 87.3 billion. And then they revised what we found out last time, where it was at 90.2 billion. So it was actually a little bit less than before. The advance report for retail inventories, it rose 1.4%. That could be somewhat negative because inventories, that means companies are producing products, they're not going out the door, they're sitting on the shelves. Where last time we got this report, it was up 1.1%. So that was a little stronger than expected. And then the wholesale report was 1.3% versus 0.6 as well. So this is also another measure of inventory, and it's showing how things are just sitting in companies right now overall, and that is not always a good thing for the economy, but we have to see the trends of how these things behave over time. Pending home sales were down 2%. They expected them to be down 0.5%, so that was greater than expected. Our trend is still negative and we're still above 20. It's going to take more than just 1 or 2 or 3 or 4 days even for that ADX to really switch. I have turned our bias back to positive, but that's a real tentative bias right now. It's just because we had an up day. We could just wear off some of this oversold condition and then start going back down. I could have also put mixed into the category, but since we were up pretty strong, I decided to keep it as positive, but our momentum is still negative overall. That's the last 2, 3, 4, 5 trading sessions. Let's go back and talk about the day's session. We still have fear over here at 19. It could go lower than this, but it's still in extreme fear territory. So we bounced up just a little bit with our chart here, but we're still below 25. This is just an Isabel net chart showing how folks are tending to get into investments. We still see a real heavy leaning over on the risk off side. Those are bonds and things that are not considered to be as risky. Although if you kind of remember what the chart looked like a week ago, there was a lot more things on the left than there are now. We're kind of getting back into the middle area of this chart. We also have the net bullish sentiment against the S&P. This is another reading showing that we're getting down to a pretty extreme reading. And this lines up with our fear and greed index. It also lines up with our ulcer index and some other sentiment measurements that we use. This is another indication too. Now, this is a couple days old. This is the Ridex bear bull ratio. It's spiking up as we're going down. Folks are getting more into the bearish mutual funds instead of the bullish mutual funds. This could go higher than it is right now, but it's also spiked around this time in the past as well. There's another chart that just, it's kind of similar to the charts that I go through. It's just a daily candle chart with moving averages on them, showing how we've been breaking down through support. This was that trend line that I showed a week or so ago, and then we broke through that. We've been coming down to some levels that we've so far have been holding up as we come down to the low, but there's not a lot different here. It's just drawn a little bit differently, so you might find this useful to look at. We have risky versus safe asset fund flows. Folks are getting out of the risky assets and into the assets that are considered to be more safe. And then the forward-looking PE. And there's a little note on here that says historically, the forward-looking PE ratio tends to bottom between 13 and 14 in a bear market. Well, we're just below 16 now in the 15 range. So this would suggest that earnings being lowered as far as their future expectations, that can help the forward PE come down, and price can also help the forward PE come down. So that would tend to be negative overall, which means that we're still in the area where we need to drop between 13 and 14, which could still be a considerable drop from where we're at right now. Then we have the daily percent change in the S&P forward looking earnings per share, and see how it's really been dropping right now. And that's just because of the economic condition. The look forward isn't as rosy as it was not so long ago. And so you have a lot of analysts really going in and adjusting their forward looking numbers, and that's having an effect on the earnings per share going forward. Here's Deutsche Bank, the US dollar trade weighted index. This just shows how the dollar's been just shooting up as other currencies have been having a lot of trouble. We did see some weakness in the dollar in Wednesday's session, but that's not reflected on this chart. They also came out with another GDP Now forecast. They've lowered it even more. A week or so ago, it was at 1.5. Then they cut it a full percent to 0.5. Then the last time I showed this chart, they cut it down to 0.3. We're just under 3 now at 0.27. So they keep lowering the forecast for GDP. Here's hedge funds and asset managers are they're overall net short right now. When they're above this line, that means they're net long. When they're below this line, they're net short because they have a lot more flexibility than a lot of other mutual funds or things that individual investors don't often implement. Then going back at the day session, the interesting thing about this, growth was up 1.89%, but value is what really helped, at least in the large caps. With the mid caps, which have really been suffering, growth did better. And in the small caps, growth did a little bit better, but they actually underperformed slightly with the large cap index. With the up day, we saw a decline in the VIX, both with the line chart, and we closed right pretty much at the bottom of the bar chart. And with that as well, we're seeing a decrease in volatility as the VIX is coming down when we measure using the VIX of the VIX. We're coming off of this extreme reading that we were seeing with the RSI 9 period. So that's coming back down. And if we continue to go up, I probably won't show this chart anymore. If we go down, we might kick ourselves back up into the extreme territory. The Ulster Index still continues to advance. This is showing that there's a lot of fear in the market currently. We're down 22.82% after Wednesday's advance. And over here on the right-hand side, see how this could be seen as some kind of a base. This red line is where we're at right now. Can we come up out of that and go higher? Are we going to come up a little bit more, maybe go sideways and then go back down? That's what we're trying to follow, at least for the time being. With the up day, we also saw a decline in the equity put call ratio on the daily chart, but it's still going higher with our 5-period moving average. And I'll have the longer term chart at the end to show you that. Here are the pivot levels for Wednesday's session. Another thing that I've thought of is, instead of bringing these up in the video, I do have the YouTube community. I could put these charts in that community, but I haven't had much feedback yet, whether you folks like to make use of the community page. I know it's one of the lesser used areas in YouTube, but it still can serve a pretty good function. So if instead of putting the charts on here, the different pivot point levels, I could just load the charts on there each day, and then you can look at them that way. So let me know what you think of that, if you even use them. Here's our daily chart showing how we're still coming up out of support and where we're able to get back above this pivot line currently. But we've got a lot of damage that's been done if we want to see the things go higher. But this could be a start if we're actually at a bottom and continuing to go up. It could also be a point where we go up a little bit and then down, or up a little bit and then down even more. So we have to be ready for any scenario. And then at the bottom, we see where volume was above average. Here are the pivot points for the month of September with the updated candlesticks. This is another chart that I could put up on the YouTube community page instead of bringing it up in the video. The intermediate term fib level, I just wanted to show this to show how we're coming down to this full retracement here, but we've been bouncing up off of that with the advance that we saw in Wednesday's session. We're still kind of in no man's land as far as this longer term Fibonacci chart, but if we can come back up, we will have some more resistance around the 30, what is that, the 38.26 level or so. There's also a long-term chart with fib retracement showing how we broke below that, but now we're coming back above that full retracement Fibonacci level, similar to what we did back in June. So will this end up being a double bottom? That could be pretty positive for the market, but we just don't know how that will play out right now. Weekly, we're still above this longer term moving average, and we're still above this 50% retracement. So this is still holding up. If we continue to go higher, we do have some overhead resistance at about the 38.19 area. I think that's right. With this 38.2% retracement. We're coming back up slightly into the midpoint of the trend channel, so that could be positive. As far as the sectors, we had energy, which has been getting hit hard a lot lately. That was up. Communication, which has been just taken out and shot for most of 2022. And discretionary, which had been improving, then showing weakness, had a good day. And then the areas that performed still not as strong were utilities and tech, but all the sectors ended up being up. As far as our scooter scores, energy was enough of a positive day behind it so that it got right back into the 90 range, but it's the only scooter score right now that is in the 90s, where communication with the update has increased from 6.5 to 9. Here is the sector showing where energy had a bit of a bounce back up. Utilities had a bit of a bounce as well, where all of the other sectors continue to be negative. Here is an updated look at the percentage changes since the S&P made its all-time high. Technical alerts, we had some negative, some positive. The euro set a new low, which means the dollar set a new 4-year high. And tech sector ended up setting a 52-week low, but then bouncing from that, where the NASDAQ first went down to 10.8, then back up to 10.9, then 11,000. So we saw some positive developments as the day went on. The cyclicals, they came back up after giving us a negative BPI reading when they dropped below 20. Well, now they're giving us a positive reading because they've come back above 20. Oil got back up over 80, and gold, just at the beginning anyway, it set a new 2-year low. As far as our scores, it's kind of interesting. The scores actually went down slightly, even with the update. The Dow's in first place, but it was down 1.1 points. And see how it rolled over just a little bit, giving us a score of 55.9, followed by the mid caps, which had been pretty weak. They actually improved quite a bit. And now the S&P's in third place, where it declined 2.6 points. So it turned down slightly. And small caps also saw some improvement to 43.3, with Qs being in last place. They were actually down a little bit to 28.4. Intraday. Okay, so we didn't see much of a change from Tuesday's close to Wednesday's open, but things were pretty positive right off the bat. We went right up to the pivot, came back down, and then we were able to break through the daily pivot, make our way up to R1, and we danced above and below R1 for a lot of the day, and then we saw some late day buying come in. Things would have been more positive if we didn't have this red candle going right into the close, but it was a pretty positive day overall. Looking at our trend, the red line did come down with the up day, but the ADX is still above the moving average and moving higher. So that's negative. Saw kind of a flat reading with our Arun where it had been bouncing up after yesterday's session. Breadth showed a bit of an improvement, but we've got a long way to go, both based on price and volume. And this is an upthrust day. When you go above this blue line, that's just massive upthrust. Sometimes that just means positive things, and sometimes that can mean negative things as well. But we saw it both based on price and volume. Saw a little bit of an improvement with our advanced decline ratio. New highs, new lows, they did contract, but it's going to take a while for the 5 period and the 10 period to show some improvement if we see follow through. Accumulation distribution showed some improvement, getting right back up to a slightly declining moving average. Short term, this is where we saw the most benefit currently. In fact, in one day, we probably overdid it as far as the advanced decline ratio with that huge up thrust day that we saw, which is kind of strange because yesterday we had a down thrust day, took a day off, and then had a down thrust day. So there's just massive, massive movement going on within stocks right now. Going over to the rate of change just one day, judging from Tuesday to Wednesday session, we're almost extreme. We almost overdid it. If we were to go above 2, it's at 1.97. That would be more extreme positive, but this was close enough, so I wanted to show the chart here. The rate of change going back 5 periods after being extreme negative is showing some improvement, as well as the 10 period rate of change. It still hasn't crossed above the line, but it is bouncing back up. Stochc RSI showing some improvement. Williams percent R coming up a little bit, but still slightly extreme negative. The force index came up to about the midpoint here of the Keltner band, so that's showing some improvement. The Swindlen trading oscillator based on price and volume did show some improvement, but we're still extreme negative. And the same thing with the McClellan oscillator. It bounced up, but we're still below this extreme negative line. Seeing a little bit of improvement with the 20, 50, and even the 200-day moving averages. Stochc still extreme negative in all 3 time frames, but did show some improvement with our stochastics. Now, intermediate term, you'll see fewer improvements here, but there are some with our 19-day exponential moving average of the advanced decline ratio. Saw a bounce up after going extreme negative, and this is one of our possible positive scenarios. So that's showing some improvement based on price as well as volume. Standard deviation still kind of not really coming down all that much as we get further away from the mean price. Rate of change 20 after going extreme negative is showing some improvement. The Sean trend meter still extreme negative, but showing some improvement. PMO not really turning up yet. It's still down overall, but our PMO studies showing an improvement with those that are rising, a bit of a turn up with those buy signals, but still extreme negative, and just a little bit lower here with those that are above 0. So slight improvement there. Chaikin oscillator turned up slightly, but we're still below this 0 dash line here. So that's still negative. The Chaikin money flow showed a little bit of an improvement. And volume, it still is above average. So it's looking a little better anyway. The vortex is still negative with the red line on top and the green line on bottom. The summation index, because the McClellan oscillator is still negative, that's where we get these figures from. They're still declining based on price and volume. Seeing just a little bit of a turn here with the volume indicator, but we're going to have to see more than what we just saw. All of our oscillators, however, because they're a lot slower, they are still pointed down. BPI, after getting extreme negative, did show a bit of a bounce. Ease of movement still shows a decline going back 14 periods. Ultimate oscillator ticked up slightly. Money flow index still continues to decline. CCI 14 coming out of an extreme negative reading, as we are not quite there yet with the CCI 20. If we come out of this, I probably won't show these charts. I really like to only show them when they're extreme positive or negative. RSI, kind of the same thing here. We're turning back up with the 14 and with the 9-period RSI. Boom indicator showing some improvement when we compare it to the 50-period moving average. Little bit of a tick up when you compare it to the 200-day moving average. Seeing a little bit of improvement on the Dow theory chart with the bounce up in the Dow, the trannies, and the utilities. But still, these two are really confirming each other, the Dow and the trannies. You might or might not use utilities as part of Dow theory, but we never did get down to a new low with the utilities. TTM squeeze still not really picking up this upward movement that we're currently seeing. Balance of power pretty much flat and more on the negative side. We won't see anything with the CMB composite index until we cross one of these lines, but we did get extreme with this reading and we're starting to show some improvement. Our different charts, now these are all trend based, and so there wasn't really much of a move to change any of these. We have kind of a hammer looking thing right here, or I guess you could call that a doji right here. That could be somewhat positive, but we're still negative overall with the Heiken Ashi. We're still negative with the Kegi, even though the red line here is going up slightly. Renko is still negative with the red boxes. 3-line break is still negative. Nothing new on the point and figure chart. We're still working off of this triple bottom breakdown. And until we see a lot more upward movement, that's the signal that will be generated. Elder impulse for the S&P has switched back to neutral, as it has for the SPY. The SAR continues to be negative. It takes a lot more for these dots to change, going from being on top to being on bottom. And we're still in pretty much deep purple land here as far as the no-go system. Long term, seeing a little bit of an improvement with our 50, 150, and 200-day moving average study. Rate of change going back 200 periods just ticked up slightly. We're still down in the COVID low range as far as the reading on this chart. Special K continues to decline, and it's going to take a lot to turn that thing. Looking at the diamonds, they've switched back to neutral with the Elder Impulse system. We came right back up to the pivot point here with the Dow. That's positive. Regained a little bit of support, which could have been resistance. We're at neutral with the Qs. We've been that way 2 days now. And we're also still staying above support currently with the pivot point here. Seeing a little bit of a drop with the Vixen because of the up day. It really declined based on the bar, but we closed in the middle. And then the line chart shows that it declined on a closing basis. We're still above support with the NASDAQ. Right now, the mid caps, they have some overhead resistance. They've just been getting hit really hard. So we want to see some small cap and mid cap strength, at least follow through strength. And here's the Wilshire with this one really wild bar here. It came right back up to the pivot point and is just slightly above that level. Now, the dollar did see some weakness. And again, if we start to really move to the upside with stocks, you're probably going to see weakness in the dollar because they tend to be going in opposite directions of each other right now. Here's the British pound where we really spiked down a couple of days ago. Well, we saw some improvement. It's currently at 1.088 to the dollar, which is still very, very low, but it is showing some improvement. Currently, we have the S&P to the dollar, as I said, going in opposite directions right now because we're getting really close to that -1 reading. Gold, it was up over 2%, but it's just been in an overall downtrend. Silver also in an overall downtrend, even though it was up 3.25%. Oil went back above 80 to close at 82.15. S&P to oil, they're both they have been going down, but oil was up and the S&P was up. So they're still having a pretty strong relationship right now. And here's the intermarket analysis. With the bounce back up in oil, it overtook the dollar, where the dollar was down and oil was up. So we'll have to see if that can continue, or if this was just an anomaly for right now, where gold, stocks, and the dollar continue to be negative, even though they did turn up in Wednesday's session. Looking at bonds, saw a little bit of a bounce based on price with both of our bond price charts, and a little bit of a decrease in the 10-year yield, a little bit of a decrease back down to 3.7 with the 30-year yield. But stocks and bonds are having a real tendency to go in the same direction, whether up or down. And our yield curves still negative with the 10 to the 5, but showing a little bit of improvement. Still negative with the 10 to the 2, but showing some improvement. Showing some improvement with the 30 to the 5-year, but we are actually showing a little bit more weakness with the 10-year to the 3-month. And then when you look at the tech sector to the 10-year, they're going in opposite directions right now. Here's where we saw the fall in our longer term rates, where the 3-month rate was still higher overall. Our scenarios, just to give you an update, was this a base? Are we going to come up out of that? We did show some improvement. Also, with our stocks above their 50-period moving average, we're still negative, but we showed some improvement with the S&P. The mid caps actually broke above this red line, and the small caps are just slightly above this red line. This would be more helpful to us when all three of them are happening at the same time. Then the 10-day average of the highs minus the lows, that's still pretty negative. We're going back 10 days for this calculation, so it's going to take longer for this indicator to move. The broad market look at the highs minus the lows, still pretty negative, even though it ticked up slightly. And then our equity put call ratio, it's still above 0.8. And are we going to spike up here and then eventually start to come back down? That is another one of our possible positive scenarios. Small cap index did have a pretty good day, up 2.77%, but we still have overhead resistance above current prices, and the small caps ticked up ever so slightly in relation to the S&P, but there's really not a lot of improvement in this chart, at least yet. The S&P to the 10-year going in opposite directions, and our sector rotation didn't show as much of an improvement, especially in the large caps, because value outperformed, but still showing some improvement with the Qs to the S&P, discretionary to the S&P, and large cap growth against large cap value actually went down slightly. But we're seeing a little bit more of an improvement with the mid caps and the small caps. Then the S&P to the 2-year also in a strong inverse relationship currently. And so even though we spiked up and have come down slightly right now, we don't know if this is going to be a valid spike currently or not. Then we saw a little bit of an improvement with the ratio between the S&P and utilities, because the S&P was up as utilities were up, but not quite as much. We need this to really turn and get going in the other direction if this is going to signal some kind of a bottom in the S&P. Staples were up 1.2%, and they're actually coming back down slightly, but we're getting really close to these other spikes that we've had before. So what's our outlook then for Thursday? We're still negative overall, and we're bouncing from being oversold. All right. But now we have to ask, can it continue? Is it going to be a bottom, or is it going to just be a short-term bounce? We have jobless claims coming out, and the second quarter GDP, which is the third estimate, that'll be released. And then we have the whole geopolitical events. And I've added the pipeline, the Nord Stream pipeline explosion to this list until we figure out a little more what's going on and what the ramifications are. That could easily feed over into the markets. So our scenarios kind of have to go with the down scenario right now, but Was this a DCB? That's a dead cat bounce. A lot of people are going to say that, and you're going to get people that are really dogmatic about how they feel. No, this is the bottom. This is the bottom. No, this is just a bounce before we get set to go lower. Fine, you can look at both sides of those, but keep an open mind to both sides, because either one of those can happen at this point. So it's really hard to go with the down scenario, even though everything is pointing down, unless we really start to break to new lows. But if we do that right now, we'll go right back into an oversold situation. It's really hard to be up right now with that scenario, because we don't know if the bounce can actually continue. Our scenarios are showing some improvement, but we don't know if they're actual signals yet. We need more confirmation. Technicals are still negative overall. And sideways, it's hard to go with that one unless you're doing some kind of credit spreads above and below the current general trend that we're going with, because the ADX is above 20 and it is negative. So our conclusion, the S&P is negative. Short term, it's bouncing from being oversold. Intermediate term, it's still pretty much oversold right now. Long term is still pretty much oversold. Some of those charts that I was showing you, we saw little turns up there, but not all that much. So thank you. Have a wonderful day. And I will look to prepare a video for Friday's session. There's a lot of different things going on right now. So have a great day. Stay safe if you're in the hurricane zone, and I will talk to you in the next video.